Talk to me honestly. I'm here. I'm here. Talk to me. I'm here.
What's up, everybody? Let's get ready to get started. Smash the like button. We got Wednesday morning, eventful day, markets gapping up already outside of DD bands, and we're looking at an irrational start. Man, this is what we were saying yesterday. Markets just rotating sectors, and I didn't trust any of that selling we saw last couple of days, and now we're pushing higher. Do we keep going higher? Do we hit 42, 4,400 like my tweet earlier in the week? It's very possible we do. Coming up this week, GDP on Thursday, initial and continual jobless claims coming out. These are going to be big market movers tomorrow. Today, long and strong. I don't think we fill this gap, but we'll have to see. All the data is going to come out. Rocket's going to show me what to look at, and I can't wait to have a look. Start the morning off with all you awesome folks. Click that like button. We'll get ready to get started.
Talk to me honestly. I'm here. I'm here.
Ooh.
Make a move in the most electrifying Honda vehicle.
What's up? Oh, hold on.
Building your online business?
YouTube wants to play some ads in the middle of the music. All right. Well, let's push the skip on all those ads. There we go. What's up? What up, everybody? Good morning. Love you guys. Had an awesome, this is an early start I got today. I was on a show called Beat the Bell with King Capital. I love those traders over there and the Kane team. They're awesome. Appreciate them having us on. We had to get up and actually fix my hair and look halfway decent. I had to put pants on and everything. Oh my goodness. My least favorite part of the my second least favorite part of the day when I used to be an engineer was getting dressed for work. Because, well, when I worked at the plant, it was better. You could go to work in your pajamas. But when I was a younger engineer, like out the door, I worked in an office. I had to wear like khakis and polo shirt and tuck in it. Ugh. And then commuting to work. Pretty soon, when Rocket Schooner unveils its new show, which we've been setting up for over a year now, you'll have to see me get up and comb my hair every day and put on pants every day. Barb takes the mad approach to trading. I love waking up to see markets irrational, so I can go back to bed. I know, right? Waking up to like a 30, 40 point drop, you're like, well, let's just take the day off. So this is crazy, right? Look at this. We have, remember, outside of the bands, anytime outside of the bands, you have to look for those catalysts or those event moments, right? So we have an event moment here, the unusual selling that came through on NQ, that big NVIDIA dump, that $50 million, I think it's 56. NVIDIA sell came back right there, which caused a velocity logic event, created the catalyst. We had some sector rotating, which is what we were seeing. Market is clearly stabilizing off of that going into GDP. I wouldn't bet that we do rally too hard going into that, but I do think that we do have some choppiness and trade up in here. We completely collapsed the low triple B. That's great. Make sure we keep our risk interval nice and steady. That looks good. Russell, which has been the stronger of the two. Okay, let me learn how to count. Stronger of the three on the screen. Has been pushing higher and higher daily. So Russell been leading the pack. Now let's see the one that's been lagging the pack, how that's going to work out. Nasdaq's been the weaker of the two. And Nasdaq is not breaking through weekly highs. So we'll see how Nasdaq is going to run today maybe. And we'll see how S&P is going to run today. S&P is breaking out into weekly highs, which I like to see. Ideally, you know, straight up whenever you gap up like this, resilience is the most important thing we look for. So we're going to see what resilience ends up saying. On the screen here, I've got my sectors ready to go. I've got 3 rocket scooter charting instances sitting here. Clearly, as we, the BRIC alliance, Brazil, Russia, Iran, China, now has Saudi Arabia. All the oil producing nations that are not the United States. That was really what caused a lot of this. You had, let's put XLE here. You had people moving out of tech and moving out of financials. Now, the financials being weak is an old story. Believe it or not, over the last couple of days, financials, while they did try to sell, they weren't really super weak. They were just wildly weak. You saw the financials were actually gaining some ground. This is the XLF for the last couple of days. It did push higher. And if you go to the XLK the last couple of days, you can see there's a little bit of a difference in the way the chart looked. It had been pushing higher, and people were rotating out of tech. So you're leaving tech, trying to leave financials, but both times it beat out. And then, obviously people were running in energy. So that was a really big play this week. That's all geopolitical, and you see the bigger run on energy. Just this alone was what was causing that big deviation in NASDAQ versus Russell's, and people were starting to push into more of a diversified, smaller cap, high risk stuff started rallying. Right, Bitcoin was rallying, small caps are rallying, so people are piling into heavier, more depressed assets and higher risk stuff as they're rotating their money around in the stuff they've already bought. I think the market's bottoming again. This is a nice little tale that it's telling, and we'll have to see how that plays out. Of course, when we get the news report come out tomorrow, GDP is going to come out, and obviously the jobless claims number are going to hint at that stagnant. I'll pull this up really quick. Oh, there's that commitment of traders. If you guys have any questions about this, I brought this up so we can talk about it. These are the different categories on the TFF report. The dealers, asset managers, leveraged funds. I posted this in the Discord. You guys have a reference to that. The commitment of traders, we sat in the dark for a while. Right, we didn't get a print on this for over 2 months, and what if you read the CFTC reasoning for the delay, has technical difficulties. They it was basically like we couldn't guarantee accurate reporting. Who knows what happened? I don't want to speculate too far, but obviously banks tend to fight dirty when it comes to the market and risk, and who knows what clogged up and congested the airways and pipelines for the banks. And like talk about the dealer intermediary, right? If you look at this, that category, just so you can understand, this is the group. So the TFF report takes the commitment of traders and breaks down the categories into smaller and more homogeneous subparts, like things that don't overlap. And so essentially each category has its own description. The dealer intermediary is the sell side companies, and basically they're just selling risk and hedging with futures. So they're not really trying to take a position in the market. You can think your market makers fit inside of here. Asset manager institutional is like your net long part of the market. Leveraged funds can be some, typical hedge funds, and typically can be net contrarian. You see that in the market. So the balance between hedge funds, longs, and market makers, what we look at in the COT. And if you look at the dealer side of the market, they were in a negative risk. The total net position of dealers is about negative 65,000 contracts. And when dealers are negative, it's usually because they're on the short side to a longing market. Either people are getting long or covering shorts, right? So magically in the blackout, the dealers, when they get the first report, come in positive, very positive. As a matter of fact, they haven't been this positive since about a year ago. And coincidence there. Oh, here's the report. Oops, now we've accumulated 141,000 net long contracts in this 2-month blackout period. We snuck into that, and you can even see it. So this is an interesting sign right here. This red line being positive. In the history of the TFF report, the TIF, since 2010, this report's come out. In the history of this report, you guys heard it here first. I've been talking about this forever and ever and ever. In the history of this report, not the COT legacy report, but this report, 2010, we've only seen 6 times when the dealers have been positive, when the categories have been here. 1, 2, 3, 4, 5, and now 6. I guess if you count this too as well. Right at the start, maybe I guess it'd be, let's see what that is. Nope, that is still negative. Okay, yeah, 6. So each time the red line is a net positive, the market's never crashed. Never crashed. As a matter of fact, it's rallied. The only time it was very, 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 very slightly positive here, there was a leg up. This little leg right here before it collapsed. Let me make this full screen, you guys can see. So just zoom in on this. You might be watching on your phones. This tiny little bit. There was a leg up, and it doesn't fall until they're negative again. Each one of these, same thing. There's ads on the screen here, right here. You're looking at this little red line above 0. So here it's the same thing. Market stabilized, didn't sell off. Here it's above 0. Market stabilized, didn't sell off. Here it's above 0. You can continue the trend, didn't stabilize. So essentially, if you think about it, and here's another one, it's positive, and this is when we call the October bottom, same thing, stabilized, didn't sell off. And now it's positive again. So, I mean, if you really think about the last time the banks played shenanigans during the mortgage crisis a decade ago, right? Everybody's buying credit default swaps to bet against the housing market. And what happened? They paid off the rating agencies, straight up fraud, to value these mortgage bonds as good just because they were diversified when they were really full of crap mortgages. And so at the end of the day, they did that to buy some time until they can accumulate a net short position themselves before they said, okay, you can rate the bonds appropriately. And then the bubble popped, right? So this is kind of like, it just smells bad. You know what I'm saying? Has a stink to it. I don't like it. Everyone here, smash the like button. Let's go. Let's hit that. The first thing you do is scroll down to the video and click the thumbs up. Y'all give us a little bit of love there. Thank you. So interesting, like shenanigans, right? Oh, the banks are long again. Oh, everybody's short in the market. Oh, banks are collapsing. Oh, all these things are happening. Oh, we can't report our positions for 2 months. Oh, we reported. Oh, we're long now. How about that? So what does that mean, right? Doesn't mean the market's bullish, but what it means is that if the dealer's side of the market is holding the bag and the dealer's side of the market prices the market, they don't lower the bid and ask. They don't lower the bid on themselves. They don't drop price on their own bag. They don't devalue their own. They don't shoot themselves in the foot. They never do. They never will. They will always push the market into the direction that least favors their own collapse, right? So, and that report's very important to note, simply because it also shows one more trend in the stock market itself. This is very bullish. Ash and I both detailed this multiple times to teach courses on this over the course of the year. I called bottoms using this as part of the tools set that I use for my analysis. This is always very important. When you see this kind of, let me zoom in a little bit more. It's this trend right here. When you see the red line positive and moving higher and the blue line negative and going lower, here's an example of that. That's this guy right here. You have a growing short. And usually people sell to buyers, but if people are selling or shorting when there are sellers, this green line are the people that are longing the market. Well, if the longs are getting out and people are shorting and both the lines are pointing in the same direction, the market's highly illiquid. Everyone's selling, the market maker has to accumulate. And what do? Is they have to hold price and redistribute their accumulation. That's exactly what you saw. So red up, blue down, when red's positive and blue's negative. It's like we saw there. It's consolidation. We also don't have buyers to buy against that short. You have everybody selling again to the dealer. It is this and repeat. Literally this and repeat. Everyone's betting against the market right now. Banks are holding the bag. What are they going to do? Oh, well, let's just go and lower the price and bankrupt ourselves. Let's do it. They hold the price. It's pretty common. What's up, Danny? Good morning from London. Hello. Barb's like, how convenient. Yeah, how convenient. Oh, something was clustering up. Oh, they just hire a couple of, I mean, obviously the GameStop thing, I think, was some clever hedge fund utilizing technology and bots to create a phenomenon around a piece of garbage stock. I mean, anybody can do anything with the internet these days. Who knows what magically congested up the airwaves for a couple months so they can sneak into a long. I don't know. I mean, I hate to wear a tinfoil hat, but when the data comes out suspect like this, it just looks like a straight line up, because that's 2 months of data missing, and all of a sudden it was, suspecting, still very negative and very flat, and then long. Oops. Somebody was shorting. Oops. Oh, now you can see my big position. And that's a big position. That's a huge discrepancy. That is very high. 100,000, 100 and something thousand contracts is very, very long for the dealers. Very strong as well. One may argue, if I remember correctly, we had a similar, I think, blackout back over here. So why it jumped up just the same. It's just funny how these things happen. Right? Oh, all of a sudden, oh, we're positive now. Oh, we were negative 3 months ago. Oh, you didn't see us? We can pause. Oh. Well, how about that for clear and transparent reporting? Straight line up on the deal. God. But the point I'm saying is this is what I'm saying, right? Let's just play devil's advocate. I'm a market maker, and I pay some hacker group to shut down the airwaves by just congesting it with all kind of stuff. Oh, darn, you guys are getting a cyber attack. Oh man. Oh, okay, go push the long button. Keep pushing the long button. Let's go before they notice. Highly suspect, right? Delayed reporting in the wake of a cyber attack on ION cleared. Look at that on a cyber attack. How coincidental those cyber attacks come at the time. Banks kind of shift their position. Pause. Man, cyber attack could have come any better time. But right now, when the market's flat and everything's crashing, and nobody's trading this market, and this is the perfect time to execute. Oh my God, we're long now. Isn't that funny? Here I am speculating in that there it is, a cyber attack. How funny that you said that. Oh man, gee golly. Well, I'm glad they fixed it just in time for us to see the market stabilizing, which is great. I like it. All right, so just queuing what in. You guys told me, told me yesterday on the Zoom call, you want me to still keep trading this ETF thing to showcase over the 45-day period what you do to keep and maintain a funded account. So I said, okay, I'll still do this on the side of my 100K challenge. That's still going. I'll still do, show y'all how to do this. So y'all don't just want to see me passing evals. My third eval I've passed, $250,000 accounts, one $250,000 account. That's $550,000 of earned funded accounts. I nailed 3 of them back to back. Boom, boom, boom. It took me 5 days or 6 days to hit the first one. This one took me like 5 or 6 days. The 250 took me 12 days. So I'm not, the other two I'm not using, the first two I'm not using. This one, I guess I'll just use one just to showcase the journey. And I'm going to make a whole video on the process and show you guys how I earn it, how you keep it. And that's going to be a new video series in our futures training course. If you guys haven't been to the Rocket Scooter yet, to check it out. That you can do $35 a month to check this out. Look in chat for the $199 package, and you can learn everything we do, and you can go and check out this course series. Minis or micros. For this, it's going to depend on what happens when the market opens. We got 1 minute till market opens. Just revisit. We are opening irrational to the upside. You see right here. DD band irrational. We are closing in that event on NASDAQ. We are clearly outside of DD bands. Also, DD bands markets irrational. I want to see what's going on. We're going to do our new sector divergence, index divergence rule. We talked about that yesterday, just to see if everything looks good out the open again. And the CD band being breached on both sides. Clearly a rational day. I'm only trading small today, so it's going to be micros. Obviously, that's the answer there. If I do anything, let's see what resilience is. Nice and positive. Nice and positive. We are opening with a massive gap up, so resilience supporting at half gap is way to go. We didn't gap and support and open here, so I'm going to let it fall to half gap and be support on that side as well. Like what I see. Oh, let me run the DD bands bought really quick. Let's get this guy for y'all. I'm here to run that in the morning. Let's go. It's 9:30 open on this. Okay. Just going to move these manuals. I'm going to let this pull back to half gap. I'd like to see this, and I'd like to grab along of half gap. It's good. So one of the first things you do, and by the way, everybody here, smash that like button if you guys like the stream, or if you hate the stream, smash it even harder. Smash it super hard. Help the algorithm out. You know how that goes. We are the godfathers of algorithmic futures trading. We now have 4,500. I think, wait, hold on. Yeah, we have 4,550 active members in the Discord now. Just 2 months ago, we had like 2,500. We are not only one of the largest, if not the largest, active futures trading communities on the planet. We're slated to become one of the biggest trading communities on the planet. I'm excited. Love you guys for supporting us and supporting what we do. Facilitating that growth here, and we love everything. Well, contract size used for 150K static account. I will show you my trick on how I do it. That's part of the course series. If you sign up, I give you a spreadsheet template on how to do it. That's the trick. I haven't lost one yet. I manually reset the first one I did, because on the very first day, Tradeovate's data feeds locked up on a Monday, and I was stuck in a trade, couldn't exit, and I said, screw this, I'm starting over. So apart from that mulligan, I have not lost a single one. So I've hit 3 back-to-back. Like I said, I don't think I lost a single day on the 250. On the 150, the first one, I don't think I lost a day, and on the 150 on the second one, I only lost 1 day. It's all about being picky. It's all about accidentally. It's about correct position size, and there's a trick on how to pick your position size. A very cool trick, and I promise if you guys all sign up for the extended trial, $35, you will learn everything I know. It's a $200 a month normal sub. Click that link. Check it out. It's 3 months at $35 a month. You can join our huge community, learn from everybody here, and you will learn everything when it comes to that. I'm not going to share the tricks on this YouTube stream, but the spreadsheet I give you, and the whole reason I'm going on this journey is because I'm going to teach a course series I want everybody out there to learn how to fucking crush these things. Not that I can guarantee your performance. This is all paper trading, by the way. So since paper trading is not real, I can teach you how to fake trade all day long. I will teach everyone how to game that system. Y'all ready to go out there and start gaming the system? How do you game the system? Well, you have to use proper risk management. There's no trick to beating these things. You have to trade well. You have to trade very well. But I tell you how these fucking circus clowns bend the rim. It's a basketball game at a carnival. You get the big teddy bear if you sink a shot. If you go out there with the ruler, the rim is about an inch shorter than it is wider. It's bent a little bit. So only the best players who also know where to aim because it's bent will beat the game. And I beat the game 3 times in a row. Haven't lost yet. There's a trick to it because you know what to look for. I can guarantee 99% of you don't know what the actual trick is to the game. Each one of them has a trick. Each one of these funny program groups have a trick. It tricks you out of your trades. It's either a drawdown, it's a trailing drawdown, it's a daily loss limit, it's giving you too much to trade with, it's baiting your patience, forcing you to trade a certain amount of days, forcing you to race a certain amount of days. You have to trade within 15 days or whatever. They're all different. So each type of quote unquote game that you have to beat is a carnival game that's rigged somehow. Now, it doesn't mean you can't beat it. You just have to know where to throw the softball at the milk bottles to knock them all down. And that's what we'll show you. Each one, and again, I planned so well, I smashed them right out the door. But because I can see the numbers and I look at it and I go, ooh, there's the trick. And trading 13 years is what makes it easy to see it. So I promise I'll show it to you guys. Matt, you have the best analogies off the top of your dome, Master Teacher. Oh, you're sweet. You're so sweet. But that's really what it is. And again, the reason for that is not because they're evil or bad. It's because they're giving funded accounts. You can't just give it to anybody. You have to give it to the person that understands how to manage risk, even in that environment. And it's a smart thing for them to do to protect themselves. Just handing out money to any YOLO kid who goes out there and starts YOLOing the market. So you have to make sure that you bend the rim a little bit and still give the scholarship for the basketball program to the guy that still sinks 10 free throws when the rim's slightly bent. That's how you know you got the good player. Because he's so good, he can see it. He knows he has to adjust his aim on the fly and still nails them all. And that's the way that you really, really, really make sure only the best people get it. And, well, at least I can teach you what to see. I'll tell you where to aim, how much to bet, all this stuff. And again, it's paper trading. So I can tell you all day long what to do as far as teaching, right? You're on your own when you do them. But my goal was to get through a bunch of them and just detail the experience. The green lines on the chart. This is what we call the rock security bands. Anytime, this is calculated by a bot. It'll soon be automated in our platform, just like the rest of our tools. Inside of these bands, market's considered rational. Outside of these bands, market is irrational and random. So the market is irrational outside of these bands. So irrational immediately teaches me to trade small. IWM has a hedge break right out the door. So that red light at the bottom right of my screen, you can see right here, is a caution. Hold on. Let me refresh my platform. It's not a hedge break. There we go. That's a hedge break. There we go. So IWM breaking hedge pressure. Be very cautious today. This being a red flag also has me trade small. So outside of those bands on the S&P are calculated in futures. We have a bot, and if you're in our program, we created a bunch of, before it's automated in our platform, we have like a Thinkorswim indicator we give out, and we have a trading view version for those of you that use either of those programs to put these lines on your charts. Anytime you're outside of these lines, market's irrational. It's going to be random. So the question is, where does it go from here? We got to break the random tie. Markets are random. Russell's good. So I look at all three indices. If any one of them breaches that green band, the markets are random. Okay. Let's delete all the catalyst stuff here. Now, where do we go from here? Is the market going to rally? Is it going to fade the gap? We don't know. But what I do know is when the market's moved this much, any one of the indices, I always trade small. So out the door, trade small. Okay. Let's analyze all the stuff we have with Rocket Scooter now. So I recreated the bands and equivalently placed them manually on my chart to kind of convert them to SPY. So let's look at the numbers we have. DD 84. What that means is we're support right here. That's it. Bullish DD. So we're at least supporting bull zone. Check. The other rule is when you open inside the bands, which we didn't, DD84 pivots to the upper band before the lower band. Since we're already outside the band, that rule doesn't apply. Number 2, resilience. White number here, 70 and 31. Again, a big discrepancy between the two, but they're both positive. So the DD band, being one of the rules that's irrational, is my position size. This indication is a gap fill predictor. So what it tells me here, with this being very bullish, that the S&P has support from here to there. It's greater than 0. Bull long up means there's a trade from, if we open and support it open, it goes this way, which didn't happen. So that trade doesn't apply. But there's another trade on bull long up, which I'll show you in the flashcard, that trades just like that. And now I've got my positions today. Now I'm going to wait and then strike. I take the letters on Rocket Scooter. This is market maker liquidity map. So I'm going to find where buyers and sellers can be. I took this BLU letter code here. This is located on our website and our Discord. I find the letter code that shows the different pressures between bulls and bears and hedging. This 1B setup, open, hedge pressure, open, is a very clean trade. Our eval accounts, paper trading accounts, they absolutely are. The evals are paper trading, and the elite is also paper trading, even though it pays out. So I found out that they have these guys have 3 stages basically. You have a regular account, it's eval, it's paper. Then they move you to another paper account called elite, but that does pay out, but they're just paying you in their pocket. And then after you pass like a 45-day evaluation period in elite, then they give you a what they call a live account. And the live account will be real money that you get paid. So the elite, they give you a paycheck for making profits. It's a fixed paycheck, no matter how much you make. As long as you pass the maximum, they pay out a maximum on a schedule. So after 20 days, they'll give you a cut as long as you get the maximum up to a certain amount. So basically, it's unlimited pay. But that's how, and each one of them has its own. Like they're all different. So this one is this is the start. So the first thing about this one is your first trade needs to be your most important. The static drawdown, you need to build some fat in the account. So because we're rejecting the open, I do believe we touch hedge pressure, and I'm willing to take a long from here to there as long as resilience is positive, right? Yeah, I'm waiting for hedge pressure. With the risk level, it's clear to be a half gap, but if we go long at half gap, the risk will be high. So you're asking what I'm doing. Well, first of all, we have to be careful with IWM on the hedge break, right? So I'm already trading small. We have a cautionary. I'm also already trading small because we're outside of D band. I'm willing to take a small scalp somewhere in here and really just call it a day. Put a little fat in the account and be done with it. Well, if you remember the sector rule yesterday, right? Let me start we have a new rule in Rocket Scooter. Does everybody remember what it was? How does my music just magically get louder? I think there's a ghost controlling my computer. My volume is turning up all on its own. Weird. My cat spilled a Celsius on my keyboard a long time ago. My computer's never been the same. Index divergence rule. Yeah. So my thoughts today. Hacker he only has control over the volume. Oh my gosh, that's hilarious. Love you guys. Hey, everyone, do me a favor. Can you scroll down and click that little thumbs up, that like button at the bottom of the stream? I want, honestly, I'm going to be honest with you guys. I want to see at least half of the people. I want to see the ratio at least 50% or more. And leave comments too. You guys have to engage. We have to do all the algorithmic stuff. Click that like button. That's what we like to hear. Support this growing stream. We're in the largest live trading streams there is. Let's get larger. You don't see DD bands on your chart, or you must add them manually. I draw them manually before they're automated. All right, guys. This sector, I'm sorry, this index divergence rule is about to play out again. Do I pay attention to the red-green volume bars on chart? I don't. No. Volume is volume. It doesn't matter advance or decline into the volume. I'd never considered that. That's just a cosmetic effect of if you advance on the candle, the volume bar is red. If you green, if you decline, it's red. I think that's why it draws it that way. How do you convert SPY to ES? It's really simple. Good question. You come into, you have to pick a reference point. So as SPY and ES are always moving against each other slightly, the green bands, anytime you convert something that's static in futures to something like an ETF, the green bands will technically dance around. So I anchor them at exactly 930 so that we're all at the same page. You just take the ratio, like so, at a fixed time. You divide the two values together. At time equals whatever. It depends on whatever time you do it. In reality, these green lines should move around in referencing SPY. They're going to dance around because the ratio changes. But if you just want to kind of estimate where they are, because really I look at futures charts to know exactly where they are because they don't move in futures charts. But if you're converting them to SPY, clearly they'll move. So if you take the time, just fix your time to give yourself a starting point to estimate. And it's just cross multiplying. So at time now, you want to convert, right? So you take the value, right? This is the price of each one of them. What is the opening price? Let's put an O there of SPY at 930. What's the opening price of futures at 930? So now let's take the calculation, right? This is price. Let's do the calc, right? This is the calc output. The ES DD is a calculation that's fixed, right? Time equals now. So what is SPY? DD. Solve for SPY. So it's this ratio times the DD. I'll give you that balance. Now, that ratio, if you keep it at 930, that ratio never changes. But the thing is that ratio always changes. So in real time, you will know that the green bands dance around a little bit. But essentially, you need a ratio at any point in time. You know, if you want to be on the same page as everyone else, use a 930 estimate. But in reality, you're going to watch futures. So whenever I'm actually trading with it all automated, I'll be on a futures chart, right? You don't see NQ? Okay, so for liquidity map, this is how this works. You look at QQQ. The magic sauce is not in the futures chart, and we will have futures data, and we're working on that now, coming in soon. But the way that this works is that the liquidity map is drawn with QQQ. With ES futures, it's using SPY. You look at the ETF chart while you trade. If you're doing futures, I'm trading ES while looking at SPY. So for NASDAQ, you're going to use QQQ and watch NASDAQ. They'll pivot at the same place. So if I'm going to short or long, pretend I'm going to long right here. As soon as this hits this blue line, I'm going to click the long. So that's how that works. The reason for that is liquidity map. The secret of liquidity map is that it is using an ETF that represents a basket of shares that are hedged in those shares, and it loops back on itself and creates that risk pressure profile, right, where it shows these arrows. You can do the same thing with futures options. So this is calculated with the ETF options. The reason that it works so well is because those options are liquid and they settle in the shares. The options settle in shares, and those shares are what's being hedged against the option anyways. So you buy the shares, somebody sells an option to the market maker who sold the shares to you. That market maker is hedging those options with the shares you bought. So it's a big circle. Futures don't have that same circle. ES futures settle in ES contracts, which may or may not be hedged with anything in the equities market. They may just be hedged with cash, or even commodities helps you see the break even better. If oil was what you want to do a liquidity map on, you wouldn't do it in CL, because oil futures can be hedged in actual barrels of oil. So that visibility is gone in the data. So you wouldn't know if somebody had 1,000 oil contracts, and instead of, you know, hedging with money or hedging with USO, they're out there buying 1 million barrels of oil delivered to their doorstep. So that visibility of that spot transaction is gone to the market. So the trick of liquidity maps is we use something that tracks the futures, and then we have the pressures, and I trade the futures off of it. Now, when we have futures data, what it will do is convert this to the futures chart just as an overlay. But in reality, what we do train, if you're using futures, is to use the ETF liquidity map and gap fills to trade the futures. That's how I do it. You just watch me. I'll show you how it works. Pretty cool. And so in our new quest, you'll be able to trade futures through Rocket Scooter, as we're working on opening that up with one of our participating brokers. And as soon as that's open, you get your futures account tied into this. You'll have your futures data pipelining in, and you get all of our futures correlations automated as well, which is the next part that's coming out. I'm circling on my screen here. Alerts caution me. Green is I'm going to trade my normal size. Yellow, any of these turn yellow, I'm going to trade a reduced size. So QQQ, interesting to see. NASDAQ resilience is negative. Is gap going to fade a little bit? We'll have to see. Irrational market, I needed this to be less than 10, and less than 10, we have that divergence problem again. Hopefully TradeStation will be available. Yes. We'll have 100 plus futures brokers to choose from. Pretty much everybody but Trade-of-8. TradeStation will be one of the ones we will eventually have, yes. You can't get res at the bottom. How do you get back res? You go to indicators and you add res. It's an indicator like so. Or you can turn on res right here on the side charts. You can also pop the side chart out, create a little separate instance of this, and create yourself a nice little... I like to make these things big on another screen. You can see like a bigger version of the res. And the difference between this one and this one is that this one updates every 2 seconds. This one locks into whatever you set your candle duration, because it's got to match on that Cartesian grid here. So this just updates and ticks. That's live. And I like making a bigger version of this, to be honest. This is just a reference to it. So in reality, when I'm trading, I'm looking at this one because I want to see, I'm going to fine tune, is this right above 0? Like, it's easier to see than like 2 or 3 data points. It says 30 data points a minute and just scrolls to the right. What up, Ashton? Squeezy beginning. Oh yeah. Now here's the thing though, right? Look at this. We had our class yesterday on the on the index divergence. When SPY is really positive and NASDAQ is negative, you have to be very careful. That divergence is creating a brand new rule, which we're adding to our unusual rule series. Divergence means yellow, already trading small. When they diverge like this, the NASDAQ can somewhat take over. You have to be very careful. So let's take a look at the sectors. Yeah, I think we're going to pull back a little bit because the NASDAQ, it's the same thing as yesterday. But I think there's an opportunity when that happens. This can be a tricky day, so I'm not, again, your first trade out the door on these I don't know, these funded account things is your first trade's got to be your best trade. And obviously, this isn't a good setup. It's too risky. There's too much going on. XLK Tech is a gap and go. Energy is now finally starting to pull back and stabilize, and financials are again pulling back and stabilizing. So what I'm going to look for again is the three sectors that are running the show today. Is that financials will likely pull down. Energy will likely pull down a little bit. So the S&P's got to come down just a little tiny bit. Now with resilience being positive in the S&P, I'm now telling myself I might get a scalp where I want it to be right at hedge pressure. So now I'm going to look for QQQ with resilience still stabilizing, has QQQ holding up here. I'm going to remove my DD bands right about there. QQQ DD bands about there. And maybe like down here somewhere. Yeah, somewhere like that. Okay. So hedge pressure incoming. When we get there, we'll have to see what SPY's doing. So we are below triple B. So I'm not going to expect a lot of heavy overshoots, right? So I'm expecting the pivots to be sharp. This is a rejection to me. So we are rejecting, probably tucking back in the bands. And a nice hedge pressure scalp is probably it. And I think the market's going to sell off from there and revert to mean just because we have GDP coming up tomorrow. Initial jobless claims, continual jobless claims. Everybody, do me a favor, smash that like button. We're not 50% yet. Home sales in 5. That's correct. So we got that coming up too. Good call. Good call. You guys are so in tune to what's going on. Home sales. That's going to be a mover, 3 minutes. Just kind of keep in mind. The oil inventory report. You know, the market's really sensitive to energy right now. And these EIA reports that come out, you know, tend to just create volatility. They never predict the market because the report is always from a week-old data. You know, they go out and survey all the midstream companies and find out, you know, what everybody's inventories are. And they report the data a week later. So spot price always reflects the real-time inventories, and futures pretty much already price in the report what it is. But the report does create volatility, and that could create some pullback in energy again, as energy is already starting to push down towards its half gap. So we'll see. Great info on ETF. I'm curious where members would find that spreadsheet you mentioned. So in the video, I teach you how to make it. If you go, there's a training course on it. It teaches you how to make it. Let me start over. I gave you the template on how to make the spreadsheet. Don't actually give out a spreadsheet because then people will just hand out the spreadsheet. So it's it teaches you in those videos just how to set up. It's pretty simple. It's not a complicated spreadsheet. So can you repeat what you'll be looking for? Wasn't clear. Long hedge pressure depending on resilience or indices. Yeah. If you guys make sure you check out the extended trial. We'll do a whole training session today. We do every day after the Zoom. I mean, after YouTube. Go to Zoom. You find the indicator for TradingView. If you join Rocket Scooter, you go to the Discord, and it will be in an area where the bots are, down to the bottom, called Member Made Tools. You know, right here. So our Discord is broken down into a couple sections. You have, this is the futures and index crew. This is the options and stocks crew. You have all kind of information here related to those communities. This is the social area. You have your tech support for the platform, patch notes, quick tips, how to get help, things like that. And then bots. So these are all of our bots that automate the processes that aren't in the platform yet. So like the dynamic hedge pressure, which is the overnight trading pivots. This is the DD bands, which is the green lines you see on my charts. Risk interval bot. This is these are information risk intervals on the most important tools that we have. It's used in everything. It's there, and then member made tools. You'll have people make all kinds of different versions for each of the platforms. This is what I love about this community. Everybody picks up and helps each other out. So all of you guys built different versions of this for different applications. You can go in there and access that. Is there video on call and put wall for rookies on the platform? Yeah, there are summary videos on liquidity maps and what these things are. The liquidity maps course will tell you what bull zone and bear zone is and how we figured it out. There's that move on the home sales, you guys. Let's refresh and take a look at that number. Meaning home sales way up. Unemployment's way up, and it's hard to get a loan. Interesting to see. So that's a huge beat on that. We can see some volatility there. Resiliences are still both hella positive, so it looks like we're going to maintain and sustain the gap. I may not get the bounce I want, but we'll see. Definitely don't want to trade NASDAQ. You need to lift the base net lick of the account off of the static drawdown. So I need my first trade needs to be small or certain. So I only am going to trade off of a hedge pressure just to build a little fat in the account. This is one of the tricks. And if I don't get it, I don't take it. Steve Swan, you're the man. You guys are awesome. Zahupi, did you get the answer you need? Okay, cool. Can you please clarify what you don't want to be trading? Why you don't want to be trading NQ? In almost all circumstances, I preferably trade the S&P NQ. I'll pop up on occasion when the opportunity is there. Today, the NQ is... The resilience went from really positive to negative for a little bit to very positive. The NASDAQ is very sensitive right now, as you see. And the S&P is rock solid. What cares about resilience? Sorry, what you care about in resilience is that the number is positive or negative and stable. It's not the direction. It's not how high it is. It's not the value. It's that it's relatively not going anywhere. So the S&P being flat and the NASDAQ dipping and rallying, it shows that people were selling tech and rotating in, or sorry, selling tech and rotating into something else. So clearly the S&P is holding the fort. You can make that assessment, right? Why is the NASDAQ filling its gap, but the S&P's not? Or trying to fill its gap. And so if I pull up the sectors that we've been observing, right? We know how to do this, and I taught a class on this yesterday. Which sectors are important? Today you can see that the XLF trying to fill its gap. XLE trying to fill its gap. Right? And tech trying to dip, or some tech stocks trying to dip. Moving up higher. So the idea that tech is moving higher and NASDAQ is pulling lower, well, then that's a discrepancy, right? Why is the XLK rallying up and the NASDAQ itself is pulling back? There's some visibility I don't have. There's a big deviation there. So it could be some of the other sectors in the NASDAQ besides these three things. So people are rotating out of something else, maybe healthcare, maybe telecom, things like that. So let's pull up one of those. All right, let's go through them. Let's look at the let's take a look at let me see really quick. Let's look at the XLV. Maybe that's the one. It would be, there we go. And then there's your NASDAQ right there. People are getting out of the healthcare. Let's look at the XLY. Your consumer discretionary still doing okay. All right. What else do you want to look at? Do not get liquidity map on. So it looks like today's pullback on NASDAQ brought to you by healthcare. Okay, and let's put XLF back on the page. I want to see what financials are doing. So obviously you can see that there's something in the NASDAQ that's not driving. Tech is doing well and healthcare is pulling back. And there's your big discrepancy in NASDAQ. So there's more rotating going on, right? People are rotating pre-GDP. The idea that SPY is nice and stable is just showing that we're not having the majority of the stock market collapsing on itself. So it's nice and stable and bullish and holding its gap, right? It's kind of gap and go scenario right now, which is good. This is a support and the market's going to move higher. I might not get the pullback today. Would I fade this? Absolutely not. All things are strong. So out the door, you just had rotating out of healthcare and then now simultaneously rotating into tech. So you can use these two together to answer the question of, hey, what's going on today? Is the market going to fade? Probably not. Yeah. So also irrational days. So the NASDAQ is the one that has the most sensitivity to what's going on. People are rotating out of things that are particularly, you know, part of the NASDAQ and the S&P, but rotating into something that's just part of the S&P. As the NASDAQ is pulling down, the S&P's flat, what are they rotating in? And you can see that they're rotating into financials and rotating into energy, same as before. The energy plays pretty strong. So, and ES is more resilient since it's a full market. Yeah, and Lee kind of nails it, right? It's a more diversified index. It's the full market. You know, you have more visibility on any kind of arbitrage by just looking at one thing. Do you recommend ES over NASDAQ? There are different times to trade different things. If the opportunity is in NASDAQ, I'll trade NASDAQ. If NASDAQ hits its resistance first, I'll trade the NASDAQ first. It all depends on the different setups. I always like to see SPY first, but a lot of times, you know, SPY will be flat while the NASDAQ moves. That's like maybe today, right? So I'm going to be eyeballing the QQQ for a quick scalp. Looks like I'm eyeballing everything else. That was fun. That Beat the Bell show was pretty cool. Hold on. I'm not gonna lie, man. I love this Herman Miller chair. I've had a shit office chair for a while, but not because of anything other than I didn't have a lot of space in the office. I have a lot of stuff in this room. Lots and lots and lots of gear, lots of computers, lots of desks. But it's efficiently designed. So I used to have this like really small, I swear I used to buy these office chairs right from Office Max. They're like, or Office Depot, whatever the store is. You know those leather chairs? I talked about this, I think yesterday or the day before. You know, you sit in, and they kind of like peel as your as your booty sweat rubs the leather off as the years go by. It's always like a $300 purchase. Buy one of those leather executive chairs, throw them away, buy them, throw them away. They just rough up pretty quick. They're only nice for the first month after you buy them. And so then I just bought, I was like, screw it. I'm going to buy just a basic chair. It was like a $25 chair. And they weren't even an office chair. It was just like a chair that you would buy, like if you had fold-out tables in a conference room. You ever been sitting you ever gone to like a trade show or a trade conference and you sit in like a giant conference room and there's those chairs with like the steel legs, the steel arms. I'm sorry, no arms, just like steel legs and a steel back. And then there's just like a cushion and that's it. Little cheapo $25 chairs. I had one of those and I bought some really nice memory foam lumbar support strap on and then a memory foam like ass pad. So I basically took that basic chair and beefed it up to some nice things. I had to have a small profile so I can actually move around, and I don't like having arms in my chair, so I can like move to the left and move to the right, just for the sake of the stream. And then I posted my gear setup. You guys see my trading setup. I have some pretty cool stuff. If you go on my Instagram, you can see the reel of all my cool stuff. I don't know if I have. Yeah, I'm Instagram. There it is right there. So then and people were like me because I didn't put the cushions around the chair, and they were like, wow, all this nice stuff, and he doesn't have a nice chair. I was like, oh yeah, funny story is I guess I never invested in a nice chair. I always just invested in like nice memory foam stuff. And I'm like, it's actually really cushy. It's really nice, but it also was always like fidgeting these things, and then I just never researched it. And then literally Tradesway Matt like chimes in and he's like, you need to go buy like a Herman Miller chair, dude. He's like, I got one and that is the chair. It is going to last you forever. I don't spend money on anything unless I like it. Like I really am frugal when it comes to spending money. I'll spend money on computer stuff. I'll spend money on my nice car. I'll spend money on my nice house. That's it. I don't like to waste money. I'm like, he showed me the price. It's a $2,000 office chair. I was like, I like my $25 chair. He's like, no, you'll notice the difference. And I was like, yeah, but I don't like arms in the chair. So no, they custom make the whole thing. You can adjustable arms, adjustable lumbar. And I started feeling like lately, last couple months, like very lethargic because I haven't been sleeping, haven't been eating well. My blood pressure was really high. I was hospitalized twice. I don't know if you guys knew that. For high blood pressure. I was in hypertensive crisis. I had to go to the hospital twice for it. The doctor's like, you need to change something, man. I was like, I know I'm working out every day, but I kind of got lazy over the holidays. Started eating like shit. I started staying up all night back in February, just, doing rock scooter stuff. And then he's like, no, you need to change something. And then he's like, how's your posture? Are you sitting up well? Are you working? And I'm like, no, I'm actually like slouching over. And Nicole actually walks in one day. She's like, you know, you're slouching a lot in that chair. And I was like, oh. I'm like, okay. This is part of my health thing, and I got my blood pressure under control. Everything's good. Life is great. And so I got the chair, long story short, for health reasons. And I fucking love it. Every money on clubbing. Oh, well, that's you. Yeah, I guess. I do partake occasionally in a nice event. The chair was absolutely worth it. I mean, it is so nice, and it's not leather. It's like that springy fabric material, like I guess executive office chair, like it's not executive, sorry, ergonomic office chair. It's great. It's low profile, which I like. The arms are adjustable. I can slide them in, slide them out, slide them down, lean back. And I just feel like I'm sitting straight up. I'm like, ooh, oh yeah. So my blood pressure was as high as 180. I was in the hospital twice. That's what she said. Oh yeah, baby. What's up? What's up? And as Theo is telling me, turning 40 just sucks. I know. It's just getting. It's what happens when you get old. I look young. That's all the exfoliating and yoga. But seriously though, getting old fucking sucks. Don't let yourself go. 180 is way too high. It was way too high, yeah. So I got medication and yada yada yada. My posture better. I'm forcing myself to work out every day. So I bit the bullet and bought me a nice office chair. I've never had one, and I'm not gonna lie, they're not paying me to say this, but it was worth every penny because I feel better. I'm like sitting straight up. There's like a support right here. I'm like, ooh, and I can move my arms around. I'm like, ooh. Didn't realize how important posture is to your overall health. I would argue that sitting up straight is helping my blood pressure. Helping me maintain strong body. I'm a fitness junkie though. I work out a lot. I do lots of different stuff. But I definitely shouldn't be slouching. Okay, gonna see if this guy pulls back a little bit. I want to see QQQ pull back. I want to see SPY pull back. Like I said, I know right now, strong resiliences, type 1 resilience is support from here. I still don't like the trade as much as I want to, but technically speaking, this is support. With the resiliences being strong like they are. In the irrational zone, clearly if I were to trade, I'd want to trade off of a support. The open is a support, doubling down at hedge pressure is a support. I'm going to elect today, since I got to get the first trade out the door, I need to fall a little bit further to hedge pressure. So if I hit 309.5 on Qs or wherever hedge pressure is on SPY and resiliences are still stable, these being near each other, positive resilience shows support inside of here to trade from here back to open. I think that's a great scoop to get. Other than that, I'm going to just sit back on it, and SPY pulling back inside, which is good. With SPY moving first, I like what I see. I want to see this rejection pop off of that. Everybody, if you don't mind smashing that like button pretty soon, be moving over to Discord where we do a Zoom call every morning, which is real training on how to use Rocket Scooter, how to use the tools. Let's find some plays today. Let's see anything that's moving quick. Starbucks. Just waiting for my entry. Not doing much. All right, I'm talking to our. All right, so. All right, so good news on the futures front. Our futures project is kicking off nice and nice and clean. There's a lot of administrative things we have to do to get futures data turned on. A major portion of that just initiated and kicked off this morning, which is great. Tesla delivery numbers next week. Oh yeah. All right, everybody. Let's see what we got. See what we got going on today. so I'm just talking about the data flow for futures broker connections. I'm gonna be meeting on that right now as we talk. I know it's it's exciting to see. So no trades yet. I do want to kind of maybe take along of hedge pressure. I don't know, but everybody, I want you guys to go check out the link at the Rocket Scooter Extended Trial. If you have not checked it out before, once in a lifetime, $35 a month or $200 a month package. You can't beat that. Go through our entire training program and just be done. Or you can stick with us forever, as most people seem to be doing. And then we'll give you a really good, it only pays for your data feeds. After that, we'll give you guys a really good discount if you stick with us. Everybody will get a grandfathered in discount, and that'll be something worth it for life. All inventories came out, yeah. Looking at runners today. Let's see if anything looks good. Awesome, man. If you guys need access, feel free to message me in Discord. Are you? Oh, what's up? Are you in the stream, Abby? It's good to see you, man. That's dope. One of the old friends from way back in the day, the OG crew, tuning in. Cool, man. Good to see you. Yeah, if you guys really, if you lock that in, it's going to be pretty cool. Trust me when I say it. You won't come in anywhere close to 199, that's for sure. Everybody in Rocket Scooter is going to get an amazing discount while this program is active, and then we're going to close the program off at some point. But it will certainly be, I'm going to tell you, the overall price of the full package of Rocket Scooter, if you get this discount, will be less than just some cheesy, corny Discord that doesn't even have a platform to go with it. So it'll be so inexpensive, and you know, we're glad to do that for this first group. So get in now, or forever hold your peace. There we go. Hedge pressure coming up. Let's go. Well, do I want to take the trade or not? Shay, message me in Discord if you haven't signed up. Everybody click here. Ooh, do I take the trade? What am I gonna do? Tune in later to see. Come on over. Since GQQ resilience is negative, so when irrational, we need the market to be a little more discrete than just right, slightly negative. I want it to be less than -10 or greater than 10. I need a little more fat when we're irrational and outside these DD bands. That's one of the things to take note of. So when you have irrational flags or yellow lights here, if they're red or yellow, I want this to be not just on the edge, -4, as you see where the left side of the screen is not negative enough. When it hits to be -10, we have index divergence like we had before, right? Terry Allen says, how do I know that's hedge pressure? Is that from the DD bot? Hedge pressure is all this on the screen minus these 2 green lines that drew is automated. The algorithm puts this here. That's it. See you in the Zoom later. Jace is like, probably, yeah, you know, I'm like, I know we get that sector. It'd be nice to see the new rule a 3rd time in a row, right? You know what I'm saying? I'd like to sit out and watch it too. I think I'm gonna probably sit out for the day as well. Even though there's a nice bull long up from here to there, having that index divergence is a problem. I have some test server approving I need to do. So it takes about an hour, 30 minutes to an hour to go through. I'm approving a new patch. I have to do all the administrative stuff. You know how that works. So as my project manager and I are going through and reviewing the new changes, we have a new patch coming through. I'll give you some details really quick. Save window states for master window. So when you collapse things, right, and you save the window layout, it'll remember what's collapsed. If that's collapsed, that's not collapsed. Just for the master. Massive push for this week's layout changes. So all of the, like we're wrapping up the auto save layout. I want to, so basically like whatever you have minimized, maximized will be remembered. The inputs will be remembered. All your checkboxes will be remembered, things like that. Okay. So we will see you guys in a little bit. Come to the Zoom. And yeah, love you guys. No trades today. It happens. Don't like what I see. I'm starting to get a little bit of index divergence. A brand new unusual rule we have. Our unusual rule series is coming out with alerts in the rule assist mode. We'll come out and show you that market's unusual. So I'm gonna trade small. When that yellow light turns on, Rockscrew, the world's first rule assist, rule-based trading platform, allows you to put in your rules. Trade by your rules, have a plan, trade by your plan, don't forget your plan. And when these new features come out, we will be the first in the world of its kind. And I promise you, everybody on planet Earth will copy what we're doing. This is so revolutionary. We got the head start. You'll see it here first. We're the inventors of this style of trading platform. And you better believe it's going to be the future of trading. We'll see you guys in a little bit. Everyone go to the Discord. Head on over, scroll up in chat. You'll see the link, or go down in the description below. There's a link. Hit the like button on the way out. We love you. No trades today. I'm sitting out, taking it easy. And yeah. Thanks for supporting Rocket Scooter.